Hey guys, what is going on? Welcome into the video. So in this one, we'll be going over what played out in the stock market last week and what to expect next, how to trade it, along with a bunch of individual stock trade ideas for the week and weeks ahead. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the S&P futures chart. Last weekend we talked about how price had backtested the 4710 level, which was the breakout trigger from the December FOMC meeting. So this was a major level, and as long as it held, the market was set up to rally higher. And we went over this trendline resistance as well as being the breakout trigger to rally back up towards 4800. And that is exactly what played out last week, as we got the breakout and big rally on Monday once it broke above that trend line. So zooming out now to the bigger picture, this whole trend since mid-December has been building out a consolidation range. The key resistance and top of the range is at 4830 to 4841, and the bottom of the range is at 4740, and then the major level below at 4710. So the 4830 to 4841 zone on the upside has rejected 5+ times and twice more last week. So this has become a very strong and well-defined resistance zone that buyers will need to get above to see a leg higher and break out for the market. Everything between there and 4710 to 4740 should be considered chop or consolidation for the most part, and sellers will need to get below 4710 for a sustainable pullback to play out. To keep things simple moving forward, a break and hold above 4841 triggers the next leg higher for the market to new highs, or for the bear case, a break and hold below 4710 triggers downside for the market, which will likely target the 4580 to 4632 key long-term zone below there. Buyers obviously continue to be in full control of the trend, but an important thing to note is that mid-January is historically a time that the market pulls back until the start of February, and that is something to be aware of if that pullback does play out. So now moving into some individual stock trade ideas. Starting out with PayPal, ticker symbol PYPL. So this stock has been heavily beat down, but is now showing signs of a potential bottom and possible explosive move higher if it's able to break out of this inverse head and shoulders pattern. So the key support to hold is the 59 to 60 zone on the downside, which is currently holding as a higher low, and the key resistance above is at the 63.3 to 64.3 zone, which also lines up with that key trendline resistance in white. Breaking above there would likely trigger an explosive move higher for the stock. Along with this, it's wedged between both of the major moving averages, with the 50-day moving average acting as key support and the 200-day moving average acting as key resistance, and those also line up with those key support and resistance zones. So overall, this stock is setting up for a big directional break soon. It would need above 63.3 to 64.3 for that upside scenario to play out. Moving on, up next is Pfizer, ticker symbol PFE. And this is a stock that we went over about a month ago as it was testing the key long-term support zone at 25.75 to 26.45 as shown on the chart. So this trade idea worked out great and followed through higher up to $30 per share. Zooming in on the chart, the stock has had a healthy pullback off of 30 now and is now backtesting the 28.35 to 28.5 zone, which will be key to hold to put in a higher low. So pretty simple trade idea here. This setup offers great risk reward and can play it with a stop loss below that 28.35 to 28.5 zone, where we're looking for that higher low to play out and form. And if it's able to hold and follow through higher from there, the upside targets above are at 30 and then 31.4. Next up is Microsoft, ticker MSFT, which just broke out of its month-long bull flag last week. All-time high breakouts like this can be very explosive. As one idea we went over last week, Nvidia played out perfectly once it broke to new highs. Microsoft is a similar look to that, and the breakout was triggered above 377.1 to 377.7, put in a higher low off 380, and closed back above all-time highs at 384.3. So those levels below now become key to hold, and if so, Microsoft can see some nice continuation higher out of this base, and the next targets above are at 390, and then the big psych level at 400. Enphase, ticker symbol ENPH, is a potential dip buy play that I'm watching in the week ahead. As shown on the chart, this 108.5 to 113.25 zone has acted as key support since 2020, triggered the breakdown last October, before reclaiming back above for a potential false breakdown setup, as long as it's able to hold as support once again. An entry within the zone offers great risk reward, and the gap fill is slightly below at 108.2, so that would be the lowest you want to see on this to keep that immediate backtest and hold of support intact and upside in play. Super Microcomputer, ticker SMCI, is another one that we went over last week and have really been talking about this one for months as it's set up in this 6-month-long base, which was likely to produce an explosive move higher. We got that move last week, which ran close to 15% to highs at 358 and is now getting tight and flagging below that resistance. In my opinion, this stock likely has more upside in it due to how explosive the setup is, and flagging just below all-time highs is exactly what you want to see here. Something simple like this could play out where a flag builds out a little bit more before breaking above 358 for the next leg higher, or we could see something like this where it backtests the 298 to 317.5 zone, establishes a higher low there before setting up for that next leg higher. As long as above that zone, overall the stock will be set up for another break higher. The next one is Coinbase, ticker symbol COIN, which went on a massive run and is now seeing a big pullback. This is due to a classic sell the news reaction to the Bitcoin ETF news. So from a fundamental perspective, trading volumes will no doubt go down on Coinbase because more will flow through the ETFs. But on the flip side, Coinbase is the custodian for 8 out of the 11 Bitcoin ETFs, where they will take about a 0.1% fee on every transaction through those 8 ETFs. So the big spot of interest I'll be watching on the chart is at about 112.5 to 113, which would backtest that trendline breakout and offer very tight risk to play at least a bounce off of, and potentially more than that if it holds. So that is what I'm watching for in the week ahead. Hope you guys enjoyed. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you have in there. Good luck trading this week, and I will catch you all next time, and peace out.